this. Okay. All right. All right. Welcome in, guys. Welcome in. Welcome. Happy Thursday. I think I'm live. I'm pretty sure I'm live right now. For some reason, I can't see it on my end. All right, we're live. We're there. We're here. We are live, and we are fully here. Awesome, guys. Welcome in. Happy Thursday. A little bit late today. I started the stream this morning in private mode, so I was wondering why nobody was here. It was just me. And then it was like a few minutes in. I was like, you know what? I'm probably just not live. So, first of all, welcome in. We have a lot to go over this morning. Rodney, Mr. Brett, why are you late for my class? Yes, I'm late. I feel like I'm late for class today, but I'm here, and we are ready to dive in. So today we're actually going to dive right into today. I want to go through a lot of things today, and we are starting later than usual. So the stragglers, let them straggle, right? Let them struggle a little bit. Let the stragglers struggle a little bit, right? We're just going to get started because we have a lot to go over this morning, guys. It is major market movements happening this morning, and there's a lot to go over. So we're going to dive into what's going on today in the SPY. Yesterday, there was some action. There was some volatility, right? There was some fireworks yesterday. If you guys are here, I imagine that most of you guys survived the FOMC session. So I'm already seeing a lot of people here this morning. Welcome in. A lot of people here. Did you guys survive? Did you guys all survive your FOMC day? That's the most important part. Did you guys survive FOMC? If you did, congratulations, right? It was a little bit of some volatility. How did you guys all do for FOMC? Did you guys take any trades? Sat in your hands? Dorsey sat in your hands. That probably was the right move. But there was some 201% in Qs. Some sat in the sidelines. Burns break even. Didn't take a single trade. Yeah. Shorted AMD, interesting. Okay, 55% Nvidia. Nvidia was nice yesterday. Wow, Nvidia was nice yesterday. Nvidia was nice. I took a little bit of SPY yesterday. I really didn't make that much. I took a little bit of SPY, got a little bit of some action down on the put side. A little bit of Google action yesterday. Google, nice. Shorted Tesla. Okay, let's dive into it. So a lot to go. I like to see. The reason why is I like to see what you guys trade. It's kind of interesting just to see if you guys trade similar things to me, or like what I want to see what other people are doing, right? It's kind of nice to see what you guys are doing. So let's move on. Let's talk about it. So SPY is gapping up, right? This is what's happening. Market's gapping up here. There is a lot of movements right now in the market, of course, because we have some fireworks. The fireworks being sponsored by earnings, right? So fireworks sponsored by earnings. Fireworks sponsored by, we have some FOMC action as well. I'm going to put my phone on D&D because I don't want anybody texting me right now. Let's go into it. So today, Thursday, July 31st. Today is the last day of July. Now, you know when you guys watch TV, I don't know if you guys remember this, but like when I was younger, I used to watch TV and would say, it's 11 p.m. Do you know where your kids are, right? Well, today is July 31st. Are you gonna mess around today, July 31st, end of month? Do not mess around today. Same idea, right? Where are your kids? That's a very bad analogy here, right? But the idea is don't be an idiot today. Okay, it's July 31st. Don't be an idiot. Where's your risk management? Let's finish off the month strong. It doesn't matter what you do as long as you cash flow today. That's the most important part about ending the month. Okay, today's session is Thursday. This Thursday morning, this Thursday beautiful morning, we have some major earnings that have reported. We had Meta report yesterday. We had Microsoft report yesterday. We had Robinhood report yesterday. We had APLD. We had Carvana. We had QCOM, Qualcomm. Right, some big fireworks in the tech space report earnings yesterday. Now it's not over yet though. We have another slew of data coming in the after-hours session today. We have Amazon. We have Apple, we have Coinbase, and we have Reddit. Okay, some big names, some big movers. Bigger, in my opinion, bigger than Meta, Microsoft, Robinhood is Apple, Amazon, Coinbase, Reddit. Okay, these are bigger names. These are names that even have a larger impact on the S&P. So be aware of that going into our Thursday afternoon session, going into Friday. Okay, in terms of economic data, today's session is also it's something to be aware of. Okay, we have major data at 8:30, which is about 9 minutes ago. We have Chicago PMI in about an hour and 5 minutes at 9:45, and then we also have some 2 p.m. data. Nothing else. That's really it. Right after 11 o'clock, it's really it. Nothing else to discuss. Yesterday, we had the FOMC announcement. In the FOMC announcement, we had some information given to us. The information given to us was as follows. I'll just summarize it from yesterday's session. The first thing was obviously no rate cut for July. This was priced in. Market knew this was going to happen. But what we did get was we did understand that there were 2 Trump appointed chair members, right, that were on the board that voted for a rate cut. Now we're starting to see a shift in the overall board going towards rate cut, reducing the rate cut by at least 25 basis points, and that seems to be what's going to happen come our September meeting. So September, the market has increased the probability of a rate cut by about 5%. I know it's marginal, but that does mean something, right? So yesterday we did see a slight bullish sort of forecast going into September because, of course, we have the ability for the idea that there is going to be a potential rate cut. Then that should be what happens. It's about a 65% chance of that happening. So again, it's not guaranteed, but that's what the market seems to be pricing in for the most part. Okay, so that's all you have to know about yesterday. Now today's session, which matters more than anything else, is our charts. So Tony, the pod boss, thank you very much. That is very nice of you, Tony. Much appreciated. You are a gentleman. I will use that to sponsor my coffee this morning. Much appreciated. That is very, very kind of you. Right. So let me get some hydration, and then we're gonna go crazy. So let's take a second. I want to read the chat for a second, and then we'll dive into our charts. JP needs to see more data. Yeah, that's what Powell is always saying, right? Powell always says he needs to see more data. That's literally his most common phrase. All right, so on the SPY chart, what happened yesterday in the SPY chart was it was pretty clear, right? If you guys were in the chat, I did take puts yesterday in SPY. I took a little bit of puts. I really did not make much. I was not very active yesterday, to be honest. I took shorts here yesterday around 630, 650, and I got some downside, or initial upside in the market, and then downside back into close, or back into 11 o'clock after I hopped off. And this was a little bit of some downside move yesterday, and the reason why was because I realized yesterday that there was opportunity to go long. Okay, the opportunity to go long was at 635. Okay, that was where we pulled back into, right? But we pushed right back into our supply zone 637, and you can see that the market was pinned before our FOMC announcement. If you guys remember from Tuesday session, I took long here on Tuesday, right here, I think it was like right here or here. I took long here on Tuesday, and then I tried to look for longs back into highs, but it couldn't get above this level. So the same level we couldn't get above on Tuesday's session is the same level we couldn't get above on Wednesday's session. So Wednesday session, this 637 became a failure spot, right? The market basically had a lot of resistance built up over here. Market couldn't get above it and fell back lower. So we stayed in range prior to FOMC, and this made sense, right? So the market stayed in this little few dollar range before FOMC between 635 and 636. And then finally, right during FOMC, you get a little pop above and then fail back lower. And the fail back lower sold us off under 635 key demand, under 633.50 key demand, and then right back into major demand below 631.50. So basically, we sold through demand one, right? Demand number one, demand number two, and then demand number three, we finally held it. So basically, 3 tries in the third try, that's where market sort of built up some strength. And then of course, we had tech earnings right in after hours, right? And then bam, big sort of explosive move higher into our Wednesday close. So very volatile day yesterday. A little bit of some choppy price action before FOMC. Then post FOMC was very volatile. And of course, at 4 p.m. when Meta and Microsoft reported earnings, you saw the big explosive move higher. So what does this mean for the market going forward? Well, the first thing is look at how beautiful our levels were, right? Our levels yesterday that we prepped for pre-market, this is all you needed to have yesterday. Not a single level that is on my chart right now is new from this week. Every level we have here has been here since Monday morning, okay? We have our 637 key supply, we had our 635 key demand, our 633.50 key demand, and of course, 631.50 major demand. That was the 3 levels we had yesterday. In today's session, it's the same thing. If you want to trade today's session, the one thing I'm going to say is, okay, big gap up in the market. Okay, so big gap up into our Thursday morning session. If you've learned anything about gap ups in this market, what does a gap up mean? Does a gap up mean that we're going to do this and just start buying calls immediately after the open, right? No, it does not mean that, right? Gap ups in the market mean the first thing is the first question you have to ask yourself when you have a gap up in the market is, where is the logical pullback long spot? That is simply it. Where is the logical pullback long spot? Today's session on the S&P, it is here and it is there. That's it. I'm not going to play games with you guys. I'm going to show you exactly what I'm seeing here. It's either level 1 or it's level 2. It's 639, it's 637. That's the 2 levels I have today's session that I'm watching for pullback longs. Either one, a little bull flag play here, right back into demand here, 639 for a little upside play, bam, higher. That's what I'm watching. Either that or I'm watching this. Those are the 2 upside plays I'm watching. Now, if the market does get back below 637 today, if the market does this today, then I think that we don't be long the market. If this happens for whatever reason, post FOMC, post earnings, something happens, right? Market goes crazy, we start flushing down lower. If this happens, this is your only bear case scenario, and I would not be interested in looking for looking for longs. If this downside happens under 637, you must tell yourself there is no reason to go long in the market until we are back down to this level over here. Why? Because if you lose 637, we should go to 635, we should go to 631.50. But as of right now, right, this seems to be not likely, right? The most likely scenario is the market's gonna fill back the gap down lower, right? Back into our 639 level, as gaps usually do fill. We're going to look for longs back at demand, and we'll look for longs back at demand. Those are the 2 long spots I'm watching today's session, and that I think is the most high probability setup to watch today on the S&P. Okay, DJ Priceless, thank you very much, DJ Priceless. That is very nice of you. DJ Priceless just gave you guys. Oh wait, no, who is that? Oh, it's DJ. It is DJ Priceless. He just gave you guys memberships. It's awesome. Thank you very much, DJ. That is very kind of you. Thank you very much. Okay, so. On the SPY chart, okay, this is what I'm watching. These are the scenarios that I think will play out. Watching for both long spots today's session, okay? On the ES chart, yesterday's session, I mean, you saw some bounce come in around the same demand zone that we had yesterday. Remember the demand we spoke about on Tuesday's session? Well, it was still demand on Wednesday. So Wednesday session, 6,400 ES, maintained support, big upside off 6,400 ES. It wasn't perfect, I'll be honest, right? You did see it. You did see us pull back to demand here and just kind of bounce around 6402. So it was not perfect, right? This is not like one of those perfect things I can say this is like textbook. It's not textbook, right? This was about a $2 zone before our big ES level. But there was opportunity here, right? You could have went short at the level here. You could have went long at the level here. That you're just playing ping pong, right? Sometimes when you're trading before major economic events, you're just a tennis player. You're a little ping pong player, right? You're just sending it here, you're sending it there, that's it, okay? Now today's session here on ES's chart, For me now, it's understanding that we are above our big levels, right? So the first thing is we are above this major 6430 level. So as long as we are above 6430 here in ES, I'm bullish, right? This is the big thing to understand. If we're above this major 6430 level ES, we're bullish. The same way, if we are above SPY 637, we're bullish. 6430 ES is that correlation. Okay, so if we are here, we're bullish, and we're looking for longs off these levels. Look for longs back in demand. That's what I'm watching today's session. Okay, if we do pull back underneath 6430, then I have no reason to go long anymore, and this is going to fail back lower, and it's probably going to fail back lower very aggressively. Okay, so either longs back at demand, or we lose demand and go back lower in a support. That's it. That's really all it is today. Now, this is super important too. If we do lose 6430 ES, or we lose that SPY level, the same level I've been talking about, if we lose these two levels, then I do not want to go long back at this 6400 ES. Okay, very important. I think it probably breaks down lower and then go back into this level over here, right? So very important understanding is the fact that the market is gapping up this morning, but there are only two spots I'm watching for longs. That's it. If it fails back below these big levels, I don't think we should go long anymore, because again, it's probably going to fail back a lot lower. The reason why is you have to think of it like this. If people are bullish right now off of a gap up, where are they looking for longs? Well, the same way we're looking for longs. They're looking for longs back here. They're looking for longs back there. If we lose this level here, this is where a lot of longs will have their stops today. So if we lose this level, we are no longer good. Okay, we have to hold this level. This is the defense level in the market today, 637. Okay. Moving on, Qs. On the QQQ, we are going way too slow here. 572 big level. That's all we have today. 572 major level. Christian, yes, absolutely Christian. I will take note of that. CRM, I'll take a look at that. CRM. Okay, but 572 Qs major level today. If you are a QQQ trader, you are simply watching 572. That is really it. You are watching for this pullback long today here at the Tuesday's highs, at the breakout level from Wednesday's session. 572 is your pullback long spot. Now, just like I said today on SPY, okay, this is your pullback long number one spot. Where's your pullback long number two? Pullback long number two actually is 569. So if we lose this 569 level, the pullback long spot number two, then we are no longer bullish on Qs. We are no longer bullish on SPY, and we can fail back lower. That's it, right? So it's kind of funny, right? Do you guys see my camera moves? It's a kind of cool thing. I just saw it move in the stream next to me. It's like one of these little AI cameras. I don't know if you guys ever seen them before, but they're really cool. Anyway, so QQQ chart, 572 big level, 569 big level. I'm watching for either this today, right? Pullback long one or pullback long two. If we lose 569, if this happens in the market, okay, this is your reason to short the market, or at least not go long the market. Because at that moment, I think if we lose 569, we are likely moving to 566, and possibly we break it, right? Because losing 569 is going to be where a lot of longs have stops today, and we must understand that. Okay, so this is your pivot today. Your major pivot today is really this level here, simply 569. Now, of course, 572 is a big bounce zone. If you want to short today, right, there is a short. If you see this happen today, that's a potential short back lower, but again, only as far as 569, right? And again, on SPY, if you want to short today in SPY, if you see this happen, you see this fail back below 639. Yes, there is a short, but only as far below as that 637. Again, I'm kind of giving you guys all the ideas today, because today's session, after big data like this, is let's see what the intraday action presents, right? If the intraday action, if the first 5-minute candle, like, look at this, right? If the first 5-minute candle looks like this, okay, then, I think probably be patient, because we don't know if the market's going to hold here at 637, right? And the second candle looks like this. If the second candle of the day looks like this, right, then okay, shit, all right, we know that there is some bull opportunity here in the market, and we can look for longs, right? But if the market just dumps like this off the open, we lose 637, just understand that the market probably sells today. The first 15 minutes of today's price action is going to be the most important part about today's session. Let's see what the intraday action presents. Let's execute off of that, okay? Apple. Apple earnings on after hours today. Of course, this 212 level was really big. I don't know if you guys traded Apple yesterday, but Apple 212 was major. I don't know. I probably didn't move much because of the contracts, right, being a bit inflated prior to earnings. But 212 is major. This is really important. right? Because the market is moving higher without the participation of Apple and without the participation of without Apple and without Amazon, right? Amazon has been weak, right? Amazon has been mostly weak, except for today, a little bit of strength, but mostly weak, right? It's been mostly weak. And then, of course, Apple has been very weak, right? So Apple and Amazon not fully participating, Amazon a bit more, but Apple not participating at all. So if Apple starts to move strong today, right, or even post earnings above 212, this is going to rally the market in an insane way, probably 650 plus on SPY. So let's look to see 212 on Apple post earnings. 212 is major. If you clear 212, then back into 216. And the major thing that I want to see for Apple, the major level we must break is 216. Okay, if this breaks, if 216 can break out, right, a big breakout above 216 is the most beautiful long opportunity for a move back to 225. Okay, so this is what I'm watching on Apple post earnings. This would be great. If you lose 205, this is a dead stock back into 190s. Okay, so post earnings, I'm watching either above 216 or under 205 as my big levels here on Apple. Okay, that's Apple's chart. Google yesterday was a bit of a little bit of a player, right? We saw some initial beautiful upside breaking retest potential here at open, but it failed. But then again, at around 10:36 in the morning, this gave you a second entry. Now this is the part about trading that people don't understand. Okay, 196 is the breakout level yesterday. 196 is the breakout level yesterday. Now by all means, the breakout level presented an entry here. This was a breakout trade. Okay. But it didn't work here. But it did work here, right? And sometimes in trading, this is what's going to happen, right? The first opportunity that presents the market above a key level, which looks fantastic, and by all means is an entry here. It may not always work. But the second entry is still there and it's still valid. That's why if you take trades like this and you have a stop like this, let's just say you take a trade above 196 on Google, okay? And you get stopped under 195.70, okay? So you lose 5-6% here, okay? This opportunity over here is going to make that money back 2 to 3x. Now the problem is this. Here's the problem. The problem is if you take a breakout trade like this here on Google, right, above your highs, and then you get stopped out, not here, but you stop out over here. So you stop out there, or you even stop out over here, you lose 20%. Now if you lose 20%, you are obviously not going to be very keen on entering this again for a second trade, because you're going to say Google sucks. Google has like a vendetta against me, right? I can't trade Google. Google must be just a bad ticker to trade. No, Google is not a bad ticker to trade. It's just the first opportunity did not work out. But the second opportunity, which comes in and presents all of the logical reasons to go long, did work, right? And this is what trading is all about. This is why I do these pre-markets, because you guys must understand what determines an entry, right? What determines an entry on a stock is how is it respond to a level. Now, at first, it did respond positively, but then failed. But at second, it did reclaim and it did maintain. And obviously, this is what sort of gave you the second long entry yesterday. And this was a good trade, right? And obviously moved higher in the market. Now, today in Google, what's going on today in Google? Google today looks like shit. Simply that, right? Google today does not look like it's presenting any long opportunities for me today. Therefore, I will leave it alone. The only thing that I'll be watching today in Google is maybe above 198, but again, this is not something I plan to trade today. Keep it in the back burner, right? 198 maybe, but again, this is something that I think is a little bit choppy. So keep your eyes away from it unless you see it strongly reclaim 198. If it does, then maybe there's a long spot there here on Google. Okay, Nvidia. On Nvidia's chart, Nvidia, 179 to 180 is your big level today. Now, if you guys recall yesterday's session, what did I say on Nvidia? I said Nvidia under 177 is bearish, but above 177 is bullish. Once Nvidia reclaimed the Friday high level, Nvidia held 177 and ripped higher back to 180. Now today's session on Nvidia, it's no longer about 177. It's now about 180. It's now about the highs of our Wednesday session. It's the highs of Wednesday session and the highs of our Tuesday session. If you're watching Nvidia today, look to see if Nvidia can develop a hold here at 180. If it pulls back today, 180 is the level you're watching. 180 to really 179.5. Watch for this whole zone over here. This is your long spot today. If you lose this level here at 179.50, this level is maybe this happens, right? A little bit of a pullback here. It bounces a little bit, but it's dead cat. It's a dead cat bounce, and this happens. If that happens, then this is where I think this fails back lower into 177. So again, this is what could happen today here in Nvidia, right? Some dead cat bounces here, 180, 179.5. That's where you can go long in the market here in Nvidia. But if it does fail below this level, right, then we go back to 177, which again is our break at level from Wednesday session. And that would be another long spot today. So watch 177 and watch 180. But again, don't be a trader that just holds forever, okay? Because if you lose 179.5 today, if you lose this level right here, then I argue we go back down to this level here. And you don't want to be a long holder into that level, right? So that is Google. That is Nvidia, guys. We're going over so many tickers today where I'm a little bit, I'm still stuck on the last chart. Okay. So refreshing. We have 1,000 viewers. We have actually 955 viewers and 343 likes. Guys, get the like count up. Please do it, right? I'm here every single day. It's the only thing I ask for. I want to have at least 500 likes. That's what gets me happy in the morning. I don't even care if I make money. I want 500 likes. I'm joking. I want to make money. I care about the money a lot more than I do the likes. Okay, so AMD's chart. AMD is, here's the problem with AMD, right? AMD did this, and I'll tell you this honestly, right? AMD, for a moment yesterday, broke 175. And I looked at it and was like, wow, is this a short entry? And it was that exact mindset, right? It was that thought in my head which caused the market to go higher like this. Because everybody is watching AMD now, right? Everybody is sort of looking to see, where is AMD going to fail, right? And the first sign of weakness in AMD, which was here yesterday, was probably shorted, right? So people probably came in the market yesterday and shorted this move, right? Under 175. But as soon as they shorted it, it reclaimed it, right? And the reclaim caused a lot of those shorts to have to buy back shares and cause the market to squeeze higher. So what's happening in AMD now is just basically every sign of weakness you see is shortable, right? And then turns into a squeeze after that. So I would, even though I said let's look for shorts under 175 on AMD, and I still think it's true, just be cautious because this chart could still go higher, right? Now, where does it need to lose for a market to go lower? It's under 175, right? If we lose 175, this is a bear structure move and downside can come in. But again, you really want to see it lose 175 with conviction because if it just does this again, right? Imagine it does this again, breaks on 175, right? Gets shorts interested again, and then does this. What's going to happen now? It's going to do this, right? That's what's going to happen. Simply, this is what's going to happen, right? Similar to what happened on Wednesday session will happen on Thursday or Friday with a big short squeeze and a push from 200. So AMD, even though you want it to go lower, it just may not go lower, right? So be careful shorting this. Only short it when you see a strong breakdown under a key level, right? And even then, right? Even then, when you're shorting it, it's still not so simple because if it does reclaim and stop you out, it's probably going to squeeze in the opposite direction. So be careful shorting AMD. Just understand that. Be a pro trader here. Pro trader would wait for us to clear under 174 would be what they're probably watching for shorts. Okay. 182 bullish level though. So you're still seeing 182 is still bullish. Obviously big level there. Okay. Tesla 330, big level 330, big level 310. I have no intention to trade Tesla in between these levels. Okay, 330, big level of resistance. 310, big level of support. Now, I can promise you, probably Rav is going to trade Tesla today. It doesn't mean you can't trade Tesla. Just understand if you are trading Tesla, don't be just trading Tesla because we say we're in Tesla. Trade Tesla when you see us reacting to a level. Okay, so if you see us do this today, right, and Tesla's like reacting to 320, right, that's your long spot. Okay, so there is a long opportunity here at 320. If we're above 320, we're bullish. Or below 320, we're bearish. So if you are trading Tesla today, use 320 as your base, as your line in the sand. If you did it yesterday, you would have made money, right? There was some longs off the open and some shorts into close. Today's session here on Tesla, it's the same thing. It's really 318.50. 318.50 is your pivot, right? So if you're above 318.50, we're bullish. If below this level, we're bearish. Okay, that's Tesla. Nothing crazy here. Big level here, big level there, and then your sort of your gauge here. Your temperature gauge here, whether we're hot or we're cold, is 318.50. Hot being bullish or cold being bearish. Okay. Moving on. Meta. So Meta is the firework of today's session. That's simply what it is. Now, in a gap up like this, what should be your first thought process? Should your first thought process be, let's just go long right now at 772 and just long this into the abyss? Right? No. And it's possible that Meta does this. It's possible that Meta does this. Look, it's possible Meta does this, right? Sure. But I don't care, right? If I'm trading Meta today, I'm trading Meta on a pullback. I'm trading Meta off of some sort of demand bounce, right? I'm trading Meta off of some sort of pullback into a key level. A key level I'll be watching here on Meta would be 750. Simply 750 is the key level. Do not chase Meta into highs. Even if it does work, right? The problem is where's your risk? Where's your risk reward? It's not there, right? Meta at some point in time, even if it does this today, it will pull back to this level here at some point. I think so, right? I think it's got to happen, right? I'm almost 99% chance this will happen at some point. Maybe not today, maybe not tomorrow, maybe not next week, right? But 750 is going to present a pullback long. Let's watch it. That's simply what I have here. 7750 for pullback longs and 740 for pullback longs. Level 1 and level 2 as your pullback long spot here on Meta's chart, okay? Microsoft, MSFT, same thing here, right? Microsoft is in a price discovery mode move. This is a move that is not, it's so far extended where I have no levels here. I have no technical levels to go long at. Now, if you are a level-based trader, you're going to say, let's look for longs here at 517, 518. But this is crazy. Microsoft is not going to pull back there today. It's simply just not going to happen. Now, Meta maybe will. Meta at some point will, right? It will pull back here at some point. Maybe even today it does. I don't know, right? It could happen, right? But Microsoft, the chances of Microsoft pulling back to 518 today is probably 0.01% chance. Okay? This simply is not going to happen. So if you're trading Microsoft today, you're trading off of some sort of fib. Okay? You're probably trading a fib level, and you're running a Fibonacci retracement through, where's my fib level? Where are my fibs? Where's my fibs? Who took my fibs away? Here they are. Okay. Fibs, you're running a fib level, and you're probably running a fib here and looking for longs here at 542. That's it, right? If you are a fib trader, you're watching for 542 pullbacks. That's simply all I have here on Microsoft's chart, right? But Microsoft is probably a name I'll stay away from, right? Truthfully, the chances of me trading Microsoft today's session is probably also 1%, right? I just don't think this is going to give me an opportunity. If there is an opportunity, it's going to be off of not really a level. It's going to be off of only a fib retracement. Because again, we have no price action here. So either 542 level, which is again not even a level, it's just a fib retracement, or 530 as your fib retracement, your 61.8, right? So again, those are the two things I'm watching today's session here at Microsoft. But I just don't love it, right? Because it's so far extended, and I think it needs a pullback. That's what it is, okay? Hood. Robinhood. So Robinhood is a little bit of not a firework, right? This is a failed firework. This is a firework that just never left the ground, okay? And of course, this is a name that probably is not one to trade today, right? I mean, maybe if it can, I mean, this is a bull flag. Again, I can see the bull flag. You can see it, right? There's a little second bull flag trading here, right? But it's just nothing here, right? I think at this point, it's bullish above 102. So if Hood is above 102, it's still bullish. That's all I have here on Hood, okay? BULL, so bull. Yesterday's session, we spoke a little bit about bull. We spoke about that 13.2 level. I think at this point, guys, if you are long bull, BULL, you are using 13.2 as your level. That's it. So you saw a little bit yesterday, some holds developing. But this hold that was here yesterday is not bullish, right? It's really not bullish. It has to get back above 15, right? This could, again, just be a bear flag, and then it moves back lower in a 13.2. So you need to see this reclaim 15.0. If that happens, that's your bull case scenario, and rally continuation trade is likely to happen, right? But as of right now, if you're trading BULL, I'm not going to scare you, right? Just use 13.2 as your stop, right? That's what I would be using as a stop loss here in BULL for shares or for long term, right? That's what I'd be looking for a hold spot here on BULL, okay? And if this happens, that's a beautiful, beautiful, beautiful opportunity for a move back into 19.0, okay? That's BULL, okay? Last ticker, guys. Last ticker is NVO. Now, there's a reason why I'm doing NVO at the end today. The reason why is because NVO is suffering. This is a stock that is suffering. This is a stock that I'm in. I'm actually in the shares on NVO. And I sold healthcare because long story about why I sold healthcare. I sold a lot of healthcare names. But NVO was one of the names I maintained. I sold MRK. I sold, what else did I say? I sold IBB. I sold a lot of healthcare names. Now, NVO is one name I maintained. Now, I knew NVO was a little bit weak, and I knew there was something going on with NVO. But at this point in time, I am going to develop a larger position in NVO. I'm looking for longs, and I'm going to get back in around 45. So 45, 46 is what I'm watching for long spot in NVO. I'm keeping this in the back burner. I'll keep you guys updated when I get filled in this, because I am still in some shares now, but I will build a lot more shares back into this demand zone here at 45, 46. Guys, again, this is a longer term trade for me, so I'm not going to dive deep into intraday. Right? Obviously, there's no intraday opportunities here, right? So stay away from intraday opportunities. Just focus on long term here in NVO, and we'll get a good buy here. Okay, so that's it for me, guys. I'll see you all for live trading or trade with us. Have a happy and safe trading session. I'll see you guys all soon. Bye, guys.